Inventory is up over 35% year over year and sales are down 10%. This is crazy. The attached market here in Greater Vancouver, is it underwater? Are we in trouble? Let's find out. The attached market, townhomes and duplexes are often seen as a middle ground between condos and detached homes, but in June 2025, that middle ground is definitely shifting. Inventory is rising, sales are cooling, and the numbers paint a very different picture than just 1 year ago. Whether you're a buyer or a seller, understanding these trends will help you make smarter decisions in today's market. So let's get into this market update video. Attached market, June 2025. Sales continue to cool in the attached segment. Some crazy sales numbers here. Sales continue to cool in the attached market and some crazy numbers here in the attached market. In June 2025, there were 387 attached home sales in all of Greater Vancouver. In the month prior, there were 433. This means a 10% decrease in sales month over month in the attached market. This is wild. Up until this point, the attached market, especially townhomes, have been carrying the Greater Vancouver market. For the longest time, the attached market was the only one where we're seeing significant sales volume and sales activity, but this is a huge change, 10% in just a month. If we look at the year over year change, also a 10% drop. So what does this mean? Townhome sales saw double-digit decline in both month over month and year over year sales volume. This segment is losing steam faster than all other market segments right now, largely due to affordability pressure. They're now too expensive for many condo buyers, but still out of reach for those looking to upgrade from a smaller home. And then when we look at external factors, even though mortgage rates have started to come down, the stress test is still keeping many move-up buyers stuck in their current properties. So that's sales. Now let's look at inventory, and we can see inventory is rising rapidly. So in June 2025, there were 2,386 active listings. When we look at 1 year ago today, the active listings for the attached market was 1,755. So this is a 35.9% increase year over year in active inventory. So this is the sharpest inventory increase of all segments this month. Sellers are clearly trying to catch the summer activity window, but many listings are going unabsorbed. Buyers are not purchasing them, leading to a more competitive listing and selling environment. What does this mean for sellers? Well, buyers now have more options. They're taking their time, so simply listing is no longer enough. You'll need pricing and marketing strategy that stands out. So now let's compare sales and listings, the sales to active ratios. Right now, they have dropped below balanced market threshold. So right now, there are 387 sales, 2,386 listings. So this is a 16.2% sales to active ratio. This is down from the mid 20% range earlier this year, which is technically a seller's market. So earlier this year in the attached market, buyers were picking up a lot of inventory. If a townhome was listed, typically it would sell within 30 or so days. Really good news for townhome sellers. But now that we have dropped into the balanced market territory, the attached segment has officially shifted from a seller's market into balanced market territory. What this means is that price growth is likely going to stall or slow unless conditions change. And when we look at benchmark price, we can see that prices are starting to slip. So in June 2025, the benchmark price was $1,112,000. The month prior, it was $1,117,000. So down 0.5% month over month. And then if we look at year over year change, this is a little bit surprising. This time last year, the benchmark price was $1,107,000. Even if we saw a decline in benchmark price month over month, the benchmark price year over year is actually up 0.5%. So what does this mean? Well, the price growth we saw earlier this year when the attached market was in a seller's market is now flattening out. It seems like we've tipped into a slight decline month over month, and this is actually the first price dip in this segment since January 2024. This is insane. So why prices are softening? Rising inventory, slower sales, and increased competition from new pre-sale townhomes, especially in Langley, Coquitlam, and Surrey, many of which are offering tons of incentives or deposit flexibility. Pre-sale projects are definitely creating a lot of pressure. Many developers are offering better value per square foot right now, especially using incentives like 5 to 10% deposits, $20,000 to $30,000 in credits, free upgrades and parking, Buyers are comparing resale townhomes to these brand new options, which puts downward pressure on prices, especially if the resale unit isn't updated or is poorly marketed. I mean, think about it. If you were looking for a townhome right now, would you rather get one that has already been lived in or a brand new one with tons of incentives, which equals out to a very similar price? The answer is pretty clear, and it shows in the numbers. So what should attached buyers be doing in this market? You now have more leverage than earlier this year, which is good news. Days on market is rising, price reductions are becoming more common, and especially in areas where inventory has jumped, like the Tri-Cities, Cloverdale, and South Surrey. Be sure to watch for motivated sellers who listed in May and haven't sold by August. That's where the best opportunities often lie. So work with a realtor who knows townhomes and is active in the market. We can actually search for these homes with very high days on market and find opportunities that way. So now, sellers, what should you know? You are in a balanced market. That means you're competing for attention. So make sure your current pricing reflects current competition, not the peak prices from 2022 or even March 2025. I know a lot of sellers in this market, especially in the attached segment. A lot of home buyers buy townhomes, eventually move up into detached market, and they don't want to lose money on the price that they paid in 2022 or 2021. So a lot of townhome sellers are reluctant to drop their prices in order to move up into that bigger home. One thing to keep in mind is even if you take a 10% loss on your townhome sale, just make sure you get a 10% discount on your larger purchase, your detached home purchase, because you will net the difference. Don't skip staging, prep, professional photos. Buyers at this price point are expecting move-in ready. And if your home isn't selling, ask your realtor for feedback and be ready to adjust as necessary. Don't chase the market down, especially right now. This is a huge shift right now for the attached market. Now, external influences that you need to look out for, first of all, is the Bank of Canada's next rate decision. More rate cuts may be on the way, but they may not have an immediate effect. Right now, it looks like they're holding rates for the short term. We'll see what happens in the long term. Immigration slowdown. So federal limits on temporary residence could soften demand slightly, especially in family-oriented segments like townhomes. And then the inflation outlook. If inflation ticks up again, rates may stay higher for longer, which would continue to dampen demand. So the attached market is shifting so fast and is no longer the seller-friendly zone that it was just a few months ago. If you're looking to make a move, whether buying or selling, strategy and timing are everything. I've got overall market update videos, condo market update videos, and detached home market update videos, so be sure to check those out, and I'll see you on the next one. Peace.